Welcome to the Deep Dive. We take your sources, unpack them, and pull out the most important nuggets of knowledge. Today, we're really cracking the code on what makes a performance report truly effective. Imagine you're handed this crucial financial document, right? Your career, maybe even the company's direction, could depend on how well you assess it. But, how do you avoid those hidden traps? How do you unlock the real insights? We'll be looking at how one company, FIAG, handled assessing their own financial report. And through that, we'll uncover some powerful strategies, but also some really common pitfalls that, anyone, including you, can learn from.
Yeah, and what's fascinating here, I think, is that we're not just talking about, number crunching or just finance. This is really about a fundamental skill, evaluating information itself. It's about making that distinction between the subject of the report, like, say, FIAG's financial health, and how effective the report is at actually conveying that subject. And this raises a really crucial question for anyone looking at data. Are you evaluating the right thing, or are you maybe getting sidetracked?
That's such a powerful starting point. So our source material, it laid out a very specific task. Evaluate FIAG's performance report. Specifically, did it address the company's objectives? How was its presentation? But a really common mistake, highlighted again and again in the sources, was people assessing FIAG's performance as a company, not the report itself. It's almost like reviewing a book by judging the author's life instead of the writing,
That's a great analogy, actually, because this issue, this misinterpretation, it's not new at all. We've seen it in so many past scenarios, and honestly, getting this right is critical for success in any kind of analytical task. The most plausible reasons, often it just comes down to maybe a lack of preparation, or perhaps going into it expecting to evaluate one thing, regardless of what the question actually asked. It's a basic misdirection.
Right. And our sources, they give us this really illuminating example of a weak answer evaluating FIAG's reports, like a gold mine of common mistakes. Really shows you what not to do. It reveals that lack of careful reading of critical thinking.
Exactly. And if we connect this to the bigger picture, a lot of these issues just stem from making assumptions. Or, crucially, failing to link the analysis back to the specific objectives that were laid out. For instance, in this weak assessment we saw, there was a basic misunderstanding of the scenario itself. The analysts, they incorrectly assumed the whole bicycle market was in permanent decline.
Right.
But the scenario actually suggested volatility, and new products like FIAG's Zone Bike for less fit users, things that could potentially stabilize or even grow sales.
So reading the context wrong from the start.
Precisely. The insight here is that context is king. You can have a brilliant analysis of data, but it's worthless if it's based on misunderstanding the basic situation. It's like building a skyscraper on quicksand. Doesn't matter how well you build it.
Yeah, that makes sense. And it gets even more basic, doesn't it? The weak answer wrongly assumed the report had both financial and non-financial info, but the sources were clear. It was only financial. And even more surprising, maybe, was confusing a 200% revenue increase for new and redesigned bikes with a 200% increase in the company's total revenue, which actually was shrinking.
Right.
That kind of error, it really suggests the writer was maybe mixing up their own commentary with the actual data.
Absolutely. And then you had these vague explanations, these unjustified claims, like saying year-on-year comparisons are good. Okay, fine, but without explaining why. Why did they help show improvement or worsening? The link wasn't made. Or suggesting things like segmental data or activity-based costing ABC, but being super vague about why it would be useful here. How does it link to FIAG's objectives specifically? It's a common trap,
Yeah.
Just defining how a model works instead of showing its actual application and value in this situation.
So it's not just about being numerically right. The clarity, the why behind the numbers, that's just as critical for making decisions. I also noticed some claims just lacked any comparators. No justification at all. Statements like, gross profit shows good performance, or administrative expenses went down, which is good, just hanging there with no context. It's like a doctor's report saying patient is good, but not explaining why or showing vitals. You definitely ask for more.
That's a perfect analogy, and it brings us right back to that core misstep we talked about earlier, repeatedly analyzing how FIAG is performing as a company.
Instead of the report.
Exactly. Instead of evaluating the report's ability to show that performance or, serve its purpose. So comments like, overall profit after tax shows great performance, or shareholders will be very happy. They were just completely missing the point of the assignment. It's a fundamental distinction.
Crucial. And the lack of precision was, alarming. The weak answer claimed the operating margin only worsened by 1.8%. But that was percentage points.
All right.
the true percentage reduction was a whopping 27.3%.
Wow.
That distinction between percentage and percentage points, it's subtle, but man, so impactful. I can easily see how that could mislead stakeholders.
Indeed. It just signals a lack of attention to detail, doesn't it? And that can undermine the whole assessment. And finally, even if some points had a tiny bit of validity, the weak answer just completely failed to organize them logically or prioritize them based on FIAG's stated objectives. There was no clear structure, made it hard to follow, hard to act on.
Okay, so we've seen the pitfalls, the red flags that scream weak assessment. Let's flip the script now. What does a truly excellent assessment look like? Our sources do give examples that show quality over quantity, precision, and like you said, that relentless focus on the core mission.
Yeah, and this is where understanding why a piece of information matters, why a report matters, really comes into focus. It has to be assessed through the lens of the company's strategic objectives. Always. In FIAG's case, their mission, their guiding stars, are basically threefold. First, give shareholders sustainable growth and returns. That's primary. Second, do that by developing and making quality bicycles. And third, bring the joy of cycling to a broad customer base. An excellent report and an excellent assessment of it must tie back to these.
Okay, so how does FIAG's current report actually stack up against those objectives? What are its strengths, even if it's not perfect?
Well, it does have some. It presents 2 years of results, which is good, allows for that basic historic benchmarking, see the overall trends.
Right.
It includes one industry average, offers some external perspective, though, yeah, it's limited. It uses a standard profit and loss format, which is generally easy to grasp for people familiar with financial reports. And it includes a short commentary, notes on exceptional costs. Those can help understanding, though, as we saw, they can also have drawbacks if not done well.
Got it. So a basic level of functionality there. But what about the key weaknesses? And maybe more importantly, the opportunities for improvement? How can we link those directly to FIAG's objectives? What are the powerful strategies FIAG could adopt in its reporting?
That's the critical question, absolutely. Let's start with their number one objective, shareholder value. The current report, well, it just doesn't directly measure shareholder wealth. It focuses on period profits, which can be short-term, even misleading sometimes. To really address this primary objective, the report needs measures like total shareholder return, TSR, or price-to-earnings ratios, PE ratios, earnings yields, dividend yields, maybe even economic value added, EVA.
EVA, right. That one looks beyond just profit.
Exactly. EVA tells you if the company is actually creating value above the cost of its capital. That's what shareholders need to know for sustainable growth. It's omission from the report. That's a major flaw in its effectiveness for that key objective.
Okay, so shifting from just profit today to value creation over time for the shareholder goal. Makes sense. What about objective 2? Quality bicycles.
Well, for the quality bicycles objective, the report provides basically no data relating to quality, zero.
Really? Nothing.
Nothing. To address this, it needs internal measures, right? Like reject rates, rework percentages, things like that. And from an external view, metrics like customer returns, warranty claims, you need that feedback loop. Okay.
And the third objective, the broad customer base.
Similar story. The report offers nothing to help FIAG see if it's reaching diverse customer types. You need data to clarify, is that revenue growth for new bikes coming from repeat customers, existing types, or genuinely new groups, customer loyalty metrics, maybe price elasticity data that would paint a much clearer picture.
So big gaps when you measure against the specific objectives. What about just general improvements, presentation, information gaps, things to make the report more effective overall?
Well, a big one is that the report is purely financial. That makes it tough for non-financial board members to really dig in and understand. Sure, it aims for clarity by stating figures in millions, but it lacks broader improvements, like highlighting key non-financial numbers, maybe using more visuals.
Yeah.
And crucially, there's missing segmental data. It doesn't split revenues or profits, ideally using something like ABC for accurate costs by bicycle type, especially for that new Zone product. This really limits strategic decision-making.
Yeah, that makes perfect sense.
Yeah.
You need to know which products are your stars and which are your dogs, right? That's fundamental for knowing where to put your resources next.
Precisely. Also, there's a pretty significant lack of budget data. The report only shows historical data, just 2 years. You need budget figures to compare actual results against what you expected. See if performance is actually on track.
Right, the variance analysis.
Exactly. And while it has that one industry average for operating margin, you need more external benchmarking, direct competitor info maybe, across all areas of FIAG's mission. You can't really benchmark effectively with just one data point.
True. And the commentary itself, you mentioned it had critical issues beyond just being brief.
It did, yeah. It was too brief. Sometimes it lacked the supporting data for its claims, like needing that segmental analysis for the new bike revenue claim. And as we discussed, it had factually incorrect calculations. That operating margin error, misstating 1.8% instead of 27.3%, that's a glaring example.
Yeah.
Fundamentally, it just doesn't clearly support the stated objectives. An excellent report and an excellent assessment of one always explains why. Why is the suggested info useful? How does it link back to objectives? How does it help decision-making? That's the powerful strategy. Always connect the data to its purpose.
This whole deep dive, it really reveals some powerful lessons, doesn't it? For anyone who needs to get up to speed quickly on complex info or evaluate a report. Whether it's for a big meeting, a project, or even just satisfying your own curiosity, it's about approaching information with that critical lens.
Absolutely. The core takeaway, I think, is always clarify the actual requirement first. Are you evaluating the thing itself or the report about the thing? It's different. Then identify the objectives, the purpose of what's being reported on. Every piece of information, every suggested improvement, it has to link back to those objectives. Focus on the why. Make sure the information is precise. Make sure it's actionable. And remember, quality of insight always trumps just the quantity of words. Every single time.
And that wraps up our deep dive for today. We've really seen how a precise understanding of what you're evaluating and why can totally transform your insights and help you navigate all that information overload out there.
Yeah, and I'd encourage you, our listeners, to think about the next report or set of data you encounter. Could be a financial statement, could be a project update, maybe even just a news article. Ask yourself, how clearly does it address its underlying objectives? Is it presenting the right information in the right way? What questions might you ask to get closer to that core purpose, to unlock those really valuable insights?
Keep those aha moments coming. We'll see you next time on The Deep Dive.